If you are new to shares and new to the stock market, it can be really hard to interpret the data that you are seeing on a stock quote or a stock sheet. So let's change that. I'm going to go through one with you right now to help you understand what you're looking at and learn how to interpret the data. And in order to do that, I'm going to need to share my screen with you. So let's do it. All right, you creepy buggers, we're on my screen now and we're on Yahoo Finance because I think that's pretty representative of the sort of data you're going to see on any app or any website that you are using. At the moment, we're looking at an Australian stock, but don't worry, all the stuff is still the same. It's universal. It'll be the same for America, Australia, or wherever you're from in between. All right, so up here, we see the company, and right next to it, we see the little nickname, which is known as the ticker, and it'll usually have dot and then part of the exchange code that it is in. So right here, it'll show you the exchange that it is trading on, which here is the ASX, Australian Stock Exchange. Delayed price because these prices, while they are current, they are not completely 100% current. There is a small delay between the actual exchange and getting it to us. Right next to that, you will see the currency. This is AUD. If it was a US company, it would say USD, US dollars. Right up here, this is the price that the stock is currently trading at. It went down for the day, $1.08, which was 3.59%, which was marked at the close time at 4:10 p.m., which is the close of the Australian market. Now, the previous close is just showing us what price the stock was at the end of the last trading day. So yesterday, it closed at $30.05, and this morning, it opened at, right here, $29.29. And you're probably thinking, Dan, why is the price different? That doesn't make sense. That is an excellent question. At the end of a day, there are after-hour trades that some brokers have access to, and usually there are nowhere near as many trades as there are during the day, so you'll find that while the price is different, it's generally pretty close to each other. Now, the bid price, $29.11, is what you would be selling the stock for if you owned stock right now. So let's just say I owned 100 shares in BHP and we wanted to sell it right now. We'd sell it at $29.11. And if someone wanted to buy shares in BHP right now, they'd be paying $29.12. So that is, you will hear people call it the asking price. What's the BHP asking price? That's the price that you would pay if you wanted to buy BHP shares right now. Now, you'll notice that not only are these prices different, but they're both different to the actual current price. Now, the reason for this is because there are premiums that are associated with buying and selling stocks. All right, next, day's range. This is just showing you the fluctuations throughout the day of the trading stock. So it opened up at $29, it got as low as $28.76, and it got as high as $29.44. And here we've got the same sort of data, but over a 52-week range. So we can see at the moment it's $29, but it was as low as $24, and it also got as high as $42. So if we take this information and go over to the chart here, we can see, yep, that's pretty representative. As high as 41, 42 over here, and it was as low as 24, 25, 26 over here, and currently at $29. So that's the 52-week range. Next, we've got the volume. Now, the volume is how many shares have been traded on this particular day. Now, average volume, and in a lot of cases on different apps and websites, it'll say average volume 3M, which is 3 months worth of data, which you can see is almost identical to the daily trades. So when this volume figure is very different to the average volume figure, you can interpret that to mean maybe something has happened on that particular day that has encouraged lots of people to buy or sell the stock. So if that number, that volume number is, for example, 40 million and it's normally 10 million, it's worth looking into what's happened today to encourage lots of people to buy or sell their stocks. Now, the market cap is the overall value or worth of a particular company. Now, when I say value, I don't mean the stock is valued at a very good price and it's worth buying. This is the overall company value. So it's valued at $146 billion. Now, the way to calculate this market cap figure is to take the current stock price and multiply that by the amount of shares owned, or the amount of shares outstanding is the technical term. So to reverse engineer that, you take 146 billion divided by the $29 and you'll get a figure around 5 billion, which means that there are 5 billion shares outstanding in BHP stock. Now, the beta is the volatility of a stock compared to the market. Now, the market is represented as 1. So you can see this is just below that, which means it's just slightly less volatile than the market. Now, the general rule is low risk equals low reward, and high volatility, something like 1.4, 1.5, or even higher, would be considered to be high risk, therefore high reward. But again, that is not always the case. It is just an indication. All right, that brings us to the PE, or the price to earnings ratio, and it is trailing 12 months, TTM. The price to earnings ratio is really important because it shows us how much investors are willing to pay per dollar of earnings. So for BHP, we are paying $15.68 per dollar that BHP earns. Now, the way we can calculate that is using the EPS, or the earnings per share, which is also trailing 12 months. Now, the earnings per share, or the EPS, shows you that for every share of BHP at the current price of $29, they are making $1.86 worth of profit. So the formula to calculate the PE ratio is you take the current stock price, you divide it by the EPS, and that's going to give you the price to earnings ratio. Now, in Australia, over the last 5 years, the average is $28, with a minimum of 15.49 and a maximum of 33.04. We want that figure to be as low as possible because that means that we are paying less money for a company that is making high profits. So it's a really good way of determining how valuable a stock is and how well it's valued at the moment. Now, while this is a really good factor to look into, it is not the determining factor of whether it is well valued. The next thing we've got is the earnings date. And this is when a company is last released or is expecting to release their profit report. People buy and trade stocks, and prices fluctuate based on confidence. So if they release a report showing better than expected growth and better than expected profit, you can often expect their price to go up, and the same goes the other way. And that is not always the case, but generally that is the path that it will take. So keep track of these dates because there is often fluctuation right around the times they release their profit reports. All right, next we've got the forward and dividend yield, which is $2.13 per share, which is 7.09% of the total price. Now, the dividends, if you've watched my videos before, you'll know this, but just quickly, the dividends is money that a company will pay you as part of their profits. They're sharing their profits with you just for investing in their company. All right, moving on. Ex-dividend date. This is effectively the date that you need to have owned the stock by to be eligible for the next dividend payment. So if you didn't own the stocks in this company before March 4th, you will not be paid dividends at their next payment date. Now, onto the last 1 year target estimate, $25.45. That is just the analyst's prediction for what BHP will be trading at in 1 year's time. Now, please don't get stuck on this figure. The only time you really need to pay attention to this figure is if it is vastly different to what you expected. All right, guys, hopefully I was nice and clear for you. Hopefully that was easy to understand. If it was, or if it wasn't, let me know in the comment section down below. And please make sure you do like while you are down there. Please subscribe if you haven't already. And until next time, I'm Dan, and you've been Dansplained. See ya!